to manage your personal finance. Hey, you don't want to be building stories or building your portfolios and not having the right you know thing to look forward to. And that's why on personal finance today we'll be taking a look at the hot streak of the Nigerian Stock Exchange, and my guests will be shedding insights on how the stock exchange works, how much money, what your money should be looking like, and hey, all that good stuff is Dr. Patrick Ejumedia, and he's the head of research at Sterling Asset Management and Trustees Limited. Good evening, Dr. Patrick. Good to have you with me.
Good evening, Joy. It's good to see you.
Lagos, don't forget that your thoughts are also important. You can share them as well. 0809 4440901. That is the number you want to, direct all your thoughts to. Contributions as well. Very, very welcome. And you know what? Let me even get into this, right? Anytime I hear about anything about stock exchange, I'm always excited. And here's the thing, right? I had friends who were in this space, even family, who dabbled into this. But anyways, away from all that, because I know the stock exchange market has been a bit on a bullish streak. I would say maybe since January 2024. And so far, the market seems to be closing in every day, gradually. And presently, um, if my data here says me right, in January 2024, the market recorded a positive close every day between January 10th and 29th. So I'd like you to expand on that and explain certain things, because what would you attribute to this bullish streak that we've been seeing on the Nigeria Stock Exchange?
Oh, so interesting, Joy. At the beginning of the year, when I saw how the market was performing early this year, I was
Hmm.
kind of skeptical because I was among those who are forecasted that the market is going to do more than what it did at the end of last year. So when the
Okay.
market, the market started very slowly. So if you check what the market
Hmm.
did in January, February, our year to date around that time was very low, even though it was positive. So
Right.
I was skeptical. The market came up in January, in February, because of earnings release in February, preparation for earnings release. We saw market moved in February. People were preparing for that. So, but in
Mm.
March and April, we saw a decline in the market. So people became worried again to see what is happening and all that. But in May, the market started, picked up again, and
Mm.
May, June is now the month that the market now said, no, I'm back to my feet. I have to grow. So we saw this rapid growth
Right.
in the month of June in particular, and now we are in July. The growth is still there. So what again? Like your question, what are the factors that has probably led to this growth? Like I
Right.
said, in the month of February, it is because of the earnings release that people were expecting in the month of March. Don't forget that firms bring out
Oh,
their financial statements at the end of every quarter. So people were trying to take position for March. That's why we saw that improvement in the month of February.
right.
But in the month of June, that we now saw that increment, is some level of confidence on investors about the macroeconomic stability in the environment. We've seen inflation
Oh.
coming down. We've seen exchange rate that is a kind of stable. So that
Hmm.
kind of puts some level of confidence on investors, and investors now saying, "Oh, this is place to come." Aside from that, we also saw that the fixed income market, particularly in the treasury bill, you will see that rate has been going down. So that
Right.
going down in rates is attracting investors to say, "Oh,
More.
since I can come to stock market and make this amount of money, why should I put my money in?" So
It's some
that's
other things that I
that will
could
give me,
just burn out.
you understand. So that's one again. Then we also have what we call, the financial system liquidity. If you check, anytime federal government does this auction in terms of treasury bill, you will see that most times it's usually oversubscribed.
Yes.
And when it's oversubscribed, it means there's so much money in circulation. That's why people are in the financial system. Sorry, if there's so much money in the
Okay.
financial system, that's why people are oversubscribing for it. So, but when these people don't get allotted, they don't get, the number of instruments, they don't get allotted this instrument. Those
Right.
monies that they've taken to this market, they bring it again, to the
And
stock
wish.
market. So this is the
Ah.
thing that you see that is now making the market to now jump up and down and all that. Then the last one that I'm sure everybody is singing about is the forbearance issue and the GTCO listing in the London
Oh
Stock Exchange.
yes,
So
that
those ones,
has made some people excited. Like, oh
you
my
know,
goodness, I tapped in when it was right.
you understand. So all these factors are the factors that is making stock markets to now begin to, well, I would say, wake up from the sleep that it has been, and all that.
Mm. All right, that is good to know. But if we had to, well, some people say that sometimes they're afraid that they're missing out on things. Can you define what the fear of missing out when it comes to stocks actually means? Because I've heard that, but I'd like your input because you're in this space. So explain what that actually means.
So, like you said, the name explains it, fear of missing out.
True, but
you know, so,
sometimes
so you know
it
what
could just be
happens?
something else. Yes.
The market is doing well now. Some investors are saying, "Wow, I think I'm missing out." So it's so the fear of missing out is just where some investors feel that other investors are making significant profit, either from a stock or
Right.
from the stock of a sector or from the
Mm.
market as a whole. So it's a
Oh.
feeling, it's an emotion because the way the market is doing now, some people have this mindset that, oh, I'm missing out. If I had bought this stock yesterday, see today, see how much JT Bank stock is closing at. So if you
Mm.
have bought it at, let's say, last week, for instance, today, look at what the price is. You would have also been significant. You understand? So
You'll be
that thing gives
cashing
you that
out.
emotion to say, oh, so the fear of missing out is the feeling that some investors have that other investors are making significant return or significant profit from their stock, either from a particular stock or from the stock of a particular sector or from the market as a whole.
Interesting. That is very explanatory. So could fear of missing out also um apply to what we're seeing right now in the stock market? Because like you said, with particulars let me say with GT now, you see how some people heard about the uptake, so they were able to delve into it and they're getting the profits right now or benefits. Let me know. Well, they're getting something. So could that also be the reason why people were a bit skeptical? They didn't buy when they should have. You know how the stock market can go. 1 minute is up, the next minute it's down. So that could that be why we're seeing how it's applying right now?
So you always find that fear of missing out in the stock market, particularly now that the market is doing, positive and is growing. But I cannot
Right.
tell you, the market has not gotten to its peak yet. So for now, we might
Oh,
not say there's still opportunity. There's still some investors that are looking at, oh, they're already missing out and they want to come into the market. But there's
okay.
still a lot of opportunity because where we have seen that the market is going to get to at the end of the year, even if you buy, for instance, now, depending on how you're able to do your analysis, your fundamental and technical analysis very well, you can still
Right, right.
take some position in the market now. So yes, I won't say that the fear of missing out is actually there now. It's possible
Mm,
for it to be there, but it's not fully there now because if it's fully there, that's when you see some huge, you see the level that you this stock would have performed. Then that's when you can say
could have
yes.
been better.
But at
Mm,
the beginning, yes, you can say there's some level of fear of missing out because some investors, like I said earlier, those who did not get allotted those fixed income instruments that they are getting, they are coming to the stock market. So those ones, by the time they are seeing what those fixed income instruments is doing, and they are looking at how much they can get in the stock market in one day, they want to rush.
oh,
So
yes, please, can I get it? I hope it's not too late. Ah,
you
did I
understand?
miss out? That's when they start to get across to all their financial advisors and asking the questions if it's too late or if it's still time. I'm talking about that.
Hmm.
Since for someone who's listening now and thinking, okay, I'm hearing what Dr. Patrick is saying. So should I? especially seeing that the streak is looking like it's hot right now. If you know what a hot streak means, you know that you want
Mm,
to be on that space,
mm,
in that
mm,
space right now. But
mm.
does that mean it's wise to tap into that market right now, or should one still be cautious? Or hey, is it according to your risk appetite?
Did they say yes? So one is to quickly say that opportunities just come once and they pass.
True,
But
true.
somebody, I was talking with somebody the other time, and the person said opportunity can be wicked. Why will it just come once? It should have been coming so many times. But this is this is I won't say yes. I will say yes. This is the right time for you to say you want to come in, because by the time the
Okay.
market actually start getting to the peak, you would have seen that the prices of shares would have gone up. So at that point, you'll be buying at a high price. So even if you are going to be making margin, your margin
Mm,
might not be very small. But my
okay.
warning that I will always give to people, which is a warning that most researchers in asset management companies usually give, is to ensure that you do your fundamental analysis and your technical analysis very well before you can say
Right.
you want to come into the market.
Okay. So that is something you want to know. So would you advise, as always, newbies like I'll call myself a newbie because hey, I
No, you're
like
already talking about it. You're already talking about it, so you know about it already.
okay. So for those who don't have an idea, or those who are
Okay.
just tiptoeing into this space,
To this
would
place.
you advise to get into the stock market uh themselves, or would you rather they outsource their outsource to others for seeing how the stock
So, so,
market is, or have a bit of both?
so it depends on the individual and the experience
Okay,
and the knowledge that the person has about the market.
right.
Yeah, so if you have the knowledge and you have the experience to do it yourself, now, like I said earlier, you must do your technical and your fundamental
Oh
analysis. If you
yes,
have those
it is
knowledge, that is very
important.
key. If you have those
Mm,
knowledge and you know when to go in and when to come out, fine, you can, you know.
okay.
But again, it's just that many developing countries like Nigeria, we are not there yet. In many countries, they have robotic advisory that will advise you on what stock to buy, when to buy it, when not to buy
Oh
it. So
yes.
you might say you don't need an asset management firm to do that for you at that point, because
Okay.
the robotic advice will tell you, oh, this stock, go and buy it now. So what that means is
Mm,
that they would have done some form of, whoever is doing those robotic arrangements would have done some form of fundamental analysis inside that would make it recommend a particular stock for you to buy. You understand? Otherwise, if you have the knowledge, you
hmm
can buy it yourself. A lot of people are trading on their own these days now. So there are a lot of platforms that are available for individuals who want to trade on their own to go to the market to trade. But if you are doing that, you are doing that at your own
mm,
this thing, because it's expected that you've done your fundamental analysis, you've done your technical analysis, and you have full understanding of the market as to when to go in and when to come out and all that.
okay. So I just want to I know there's a quick break coming in which we'll take in a few minutes. But here's the thing, you spoke about robots, right? And that I would like to associate with AI.
Hmm.
So for
Don't tell
someone
me,
who's
I know you are not a Gen Z, so,
oh, definitely not, but even with that, we have AI presently, and I've seen where some people say, oh, they have bots that help them determine when and how. Would you say, would you in your with your expertise suggest or say, okay, you can actually rely on this bot? What's your take on that?
at the moment, everybody is skeptical, everybody is scared about this robotic kind of thing. I was talking to a friend the other time, and I was telling him that, oh, we now have robot who does operation for people. So if you are sick or you want to do operation at the theater, the robot comes and does. And the guy said, over his dead body, will not allow the robots to come
Oh
and
my
operate
word.
it. But I can tell you, that's where the world is going to. In another
Right,
10,
right.
15, 20 years, that's where we'll find ourselves. So either we accept it. If you were living at the time where we were talking about typewriter and computer, I'm sure people would have said computer will never work.
It will
today.
never come to be. But now
It is the order of the
we have
day.
our tech, and that's what's
You
even
know, you
enabling
know,
us to have this
you
conversation
understand? So
without being in the same space.
because it is an emerging space, people are
Right.
skeptical, people are worried. Yes, and it's not surprising. But over time, I'm sure that the fear will go away, and that is what people will begin to live with.
So don't knock it until you try it, in other words. But Lagos, we'll get into further conversations, especially where the stock market. We'll take a look at the banking sector and how that is panning out. I know some people will be excited once we get into that sector, but let's take a quick breather. On the other side, we'll definitely continue the conversations here on Smooth 98.1. So just in another minute, we're back in.
Okay, okay, that's all right.
All
I hope
right.
I'll get the video, the recording when you are
Oh
done.
yes, I'll send you. Brochus will send you the link to
Okay,
because it's on YouTube, so you can always go back
so
and.
check it out.
Oh yeah.
Okay, it's fine. And I hope it's going on fine so far.
Oh, most definitely. We're having a great conversation. It's actually very insightful. So yes, thank you so much.
And the stock market is one aspect that people want to come in, but everybody is scared. Like you rightly
They're
said,
very scared.
you can come
No,
in today
you wouldn't
and
blame them now. Nobody wants to lose money. Everybody wants to gain
but
something, but
you
you're not ready.
know that, like they say in investment, the more risk you take, the more the chances of making it.
More
So
money,
risk,
exactly. So
so
if you're not
no,
willing to
if
take the risk,
so what you just need to do is to develop your shock absorber, so that if you lose it, don't put the money that you want to use for your food.
that one is hard though. You say what? That one is definitely going to cut my heart. My money that I'm using for retirement.
No, so what you would do? No, so what you do? People divide their money into different levels. It's okay. This money is my retirement money. This money is my investment money. This money is my this money and all that. So you know the money that if I lose, they say if you
It
cannot
wouldn't it
lose it.
wouldn't hurt so much. Yeah. I get what you
Exactly.
mean.
But the problem is that human beings by nature are greedy. So by the time you put
You did say that. All right, let's get back in. Oh my word. All right, Lego. Sometimes the fun of having certain conversations is behind the scenes. You can be behind the scenes. Well, don't worry. You can always get all the insights and all the behind the scenes if you are logged in on YouTube. That is youtube.com/smooth 981 FM Lagos. You get all the behind the scenes and everything else in between. But yes, you're still tuning into personal finance here on Smooth 98.1. And my guest, who is still sharing insights, especially for those who are thinking of dabbling into the stock market, is Dr. Patrick Ejumedia. He is the head of research, Sterling Asset Management and Trustees Limited. So it's definitely my pleasure still having you share all these insights. Like I said, we're going to get into the banking sector itself. Yes, we need to touch on that. Now, all that forbearance thing and all that happened recently, what is your take on the banking sector, especially with regards to the stock market?
Yeah, so first we must, if you understand the Nigerian economy and you
Mm-hmm.
understand the role of that the financial sector have been playing in the Nigerian economy in terms of contributing to growth, even when the banking sector is not doing well, even when the financial sector is not doing well, you still see the banking sector still contributing significantly in terms of
Oh,
the financial sector
okay.
contributing to growth. So yes, the whole idea of this banking sector started with this idea of recapitalization thing, and they gave them 2 years to be able to do it and all that.
Mm-hmm.
And also getting to this year, I think the CBN was worried to say, come, these guys, you are not
Yeah,
meeting your
relax.
you
Let's
know,
put some fire in
you
there.
know, and they decided to do that. The way and manner they did it is an issue for different is a separate issue that we'll have in a separate discussion. But
Hey.
but at least they brought it out. And I
All
think
right.
the good thing about it is that the banking sector, they were able to come out to say, oh, yes, we are aware of these things, and yes, we can manage it. you know. But in
Mm.
the day when it came out, it put some fear in some investors. If you check what happened on
Right,
that day
right.
that that news came out, people sold.
Oh,
Everybody was there. The banking stock was all red,
they
red,
were
red,
selling
red.
on
Everybody
rest.
want to sell it, So people, and again, but the banking people came out to say, "Oh, we can manage this thing. We are aware that it's happening, but we can manage it. It's not nothing to
Mm,
worry about." And with that kind of news, the banking stock started picking again, and they started picking again, and they started picking again, and now they started doing well. And coupled with the GTCO listing that we now saw on the
mm-hmm.
LSE, London Stock Exchange, all those things now kind of put some level of confidence again in the banking
In
sector
people.
stock, and people
Right,
are started
right.
coming back. And I can tell you, by 2026, when the recapitalization process should have been over, for those banks who will be able to meet that recapitalization, their
Mm-hmm.
stock will go very high. This will just be the beginning of their stock price.
Oh,
Because as
so
it is
you
now, it's
should
like
still
you're
tap
buying it
into
cheap.
it.
You're buying it cheap because at that time, a bank that whose what's it called? His capital base is around 500 billion, and you want to buy a stock for
So if you haven't bought, you need to get in right now.
you
I know
know
when things were selling for 2 naira, people were looking at
somebody
this one is not
somebody
going to pick
I
anywhere.
was discussing with a friend again some time ago, and we went to a restaurant and we were trying to get some food. And the guy was saying, "Oh, like 2 years ago when I came to this place to eat, they were telling me a plate of food is this amount. Thank God I ate it then. If not, I won't have been able to eat it again because now it's not very expensive."
The price of everything back then and now is so different.
So if you are not done it then, if you are not
It
done it
just
then, you may not be able to do
just
it
stuck
again.
it that you might not be able to get. But that's the sad part of things, right? When you let things linger, that's why certain times they tell you you need to strike while you need to strike while it's hot, and that's
And
why if you if you
you
need
know the
to,
funny part? Stock has no template. And
sadly
stock
so,
does not wait for anybody. So the moment you see the opportunity, if
you
you
need to
drag
grab
too
it.
much, it passes, and that's all.
Mm.
So you must be at alert. You must be doing your technical analysis, your fundamentals analysis, almost like a year in. Get so that you'll be on
I,
top of the game at some point in
I
time.
agree with you on this one because certain friends who are in this space, oh, they tell me how they've seen some stocks that they should have bought when it was next to nothing, and
You
now
see, look at the
it
price.
just seems like,
you
oh my
know. But
goodness.
yeah. So
Hmm.
again, there are some people who have also bought at some point and the price
Oh yes,
collapsed.
it burns them hard, and it just keeps dwindling, and you're like, oh my word.
And they are like, oh, I
You
know some
like,
people who actually borrowed money with the expectation that the stock price is going to
oh
appreciate,
my
and the
word.
price collapsed, and they are paying debt. Okay.
Well, they say you win some, you lose some. So do your market
the
research
only ones,
properly.
the only ones you will win are the one you make calculative move on. So it's
Okay.
not by luck.
It's it's not by gambling.
No. That is not by gambling. That's why you do fundamental analysis. That's why you do your technical analysis. That's why you have some level of
Right.
information about the company that you want to buy the stock.
I agree with you on that
So
one.
you don't just say, "Oh, let me just go in," and
Let me
no,
just try my luck.
there's no trying of luck.
Don't.
No. You
It's
burn
not
your
trial
finger.
and error.
No. We say you take calculative risk, calculative moves.
That's the word. So
That's
you
it. You don't just
calculate everything you do before you get into it. And
mm,
talking about calculating, right? Let's talk about consumer goods on the stock exchange market. I know
mm,
that they've made returns of over 50% this year. What's your
mm.
take on that sector as well?
Interesting. For every economy, it's just that they said the Nigerian economy has a figure eight shape. I don't know if you've heard that before. A figure eight
Interesting.
shape.
That's the first I'm hearing.
Yeah, a figure
Okay.
eight shape in the sense that every economy has three sectors: the
Right.
manufacturing sector, you know, the tertiary sector, and the service sector. So the primary, they
Okay.
call it primary, secondary, and
Yeah.
tertiary.
Yeah.
So at the early stage of growth, the primary sector, which is mostly agriculture, is supposed to drive growth. At
Mm,
the second stage of growth, the secondary sector, which is mainly the consumer goods manufacturing sector, is expected to
mm,
drive growth. Then at the last stage, the service sector begin to drive growth. In the case of Nigeria economy, we've seen agriculture doing well in terms of contribution to GDP. We've
Right.
seen service sector doing fantastically well, if there's a word like that.
Fair enough. Fair enough.
But we've seen the secondary sector, which has the consumer goods sector, very slim. So that's why I say that's figure eight. So there is, but so far in the market,
Mm.
what you have seen now, year to date, that consumer sector has done about 50%. And why have they done it? If you remember last year, there was exchange rate issues. There was high inflation that affected firms in that sector.
Yes,
And
indeed.
as at December, a lot of analysts, including myself, for instance, has forecasted that yes, the exchange rate is going to be stable this year and it's going to be stable around 1.5, particularly when the government released their budget and they said they are going to do 1.5 exchange
Okay.
rate. So a lot of analysts are going to say, oh, the exchange is going to over around that amount because the government did
Right.
it. So most of them has factored this into whatever they are doing. And so at Q1 this year, because
Mm.
inflation soon started coming down because of the rebasing and other factors that happened, when most of them brought out their Q1 result, it was profit. They made profit. And that
Right.
profit, one of the things that drives investors to take position in a particular stock is the profit that the firm is making. So that profit attracted investors to those stocks, and that's why you see them, they've done year to date. So if we now find macroeconomic environment, inflation coming down, exchange
Mm-hmm.
rate relatively stable, and all that, you might see them towards the end of the year. They might also do still very well. They might still do very well before the year runs out. They might still get to that level that we are thinking that they will get to, you know.
Mm.
So they are not doing bad, and we expect them to do more. That's why I gave the figure eight example. Now they are still very.
I like that. Would you say that the cement companies are also in this figure eight?
you know,
How would you determine how would you determine their own?
the industrial sector is another very interesting part, and people
Okay.
are looking at it carefully. Don't forget that just 6 months ago in December, we were talking
It
about the
was
30th December. You
it was
remember?
yes.
And that 30th December, you know what happened? If you follow the news closely, then there was the news that almost all the hotels and shotlets they were fully booked.
Indeed they were.
Good. So what happened? What is happening now is that people are already forecasting that there's going to be another 30 December because some people in abroad.
Yes. As
so
always, there will be dating
so
of
they so they,
December.
they are building. They are building
Okay.
shotlets. They are building houses.
Okay.
And coupled with the fact that government is also doing roads and they are using cement for the
Oh,
road.
yes.
There's
Yes,
construction going
indeed.
on. So it's also
Mm.
an interesting sector for you to look at too. But again, you cannot go into it
Mm.
without carefully doing your analysis, your
I
fundamental
agree with
analysis,
you on that
your
one.
technical analysis, your knowledge of the firm, information about the sector, and all that. All those things are key for you to make that decision.
Important thing is do your analysis. I like that.
Very
I'm
key.
going to I'm going to hold on to that one going further. I
Yeah,
always do my analysis.
very
Uh
important so that you don't get your fingers burned.
oh my word.
And don't lose your money so that you also do not lose your money for food.
All right, let's get into the almighty oil and gas sector because we cannot leave this place without talking about oil and gas. And
Yeah,
here is the thing. I know oil prices have fallen this year, but with that, what does that portend for the stock market?
yeah.
How is that sector looking?
Again. I'm sure you would have also heard about the saying that when the oil sector cough, the Nigerian economy catches pneumonia. I'm sure you'd have heard
Now
about
that's a good
that
one. That's a
because
very good one.
that's the life wire.
Okay.
But unfortunately, we've seen oil prices coming down. And of course,
Right.
if you are looking at the stock in that sector, you are either classifying either upstream or downstream sector. For those firms in the upstream sector, those are the ones that are exploring and searching for the crude oil and producing and all that. Those ones, because oil price is coming down and the sector is actually capital intensive, very expensive to go into.
Very,
For some
very.
of them, they might be making a loss. But for those ones
Mm,
that are in the downstream sector, the distribution and selling that you see,
mhm.
the ability for them to shift the cost to the final consumer will determine whether they will make a loss or make profit. And the demand, so if people keep buying, demand is high, they will be able to shift it because it's more like an inelastic demand kind of good. They shift it and they'll be able to make their profit. So it depends on the sector, you know. But overall, if oil price keep coming down, then they will have issues because it is the price of oil it is the price that determines how much profit they
How
are going
much
to
of
make at the end of the day. And if once they are not making profits, they can't be their share price will not be good because they won't be paying dividend, they won't be giving those kind of things that are beneficial to those who have taken part in their stock. So that would push stock away. Ordinarily, too, when investors see that oil price is going down, they begin to run away. They
they
run
would?
away because it will tell
We cannot
you
have
that
our money down.
yes, like to tell you that these people they are not likely going to make profit. Oil price is going down, so the people will start running away from the sector. You know,
Mm,
so it's as simple as that.
as they say, wahala for
Serious
money.
one, serious wahala.
But yes, let me take your overall outlook for the stock market for the rest of the year before we wrap things up. What does it look like? What do you think it could look like?
For me, I think the market is just waking up from the sleep
Mm,
because now this is July and we are seeing how the market year to date the market has done in terms of basis point over 128, thousand basis points. Now in terms of growth year to date, it has done about 25% year to
mhm,
date. Now, don't forget that we're also expecting interim dividend to come out by the time they start releasing their Q2 or half year earnings reports. So, interim dividend will be coming out. People will be taking position for interim dividend. That's one.
okay.
Q2 or half year earnings report is going to come out. People will be taking position too. Don't forget that inflation too is trending downward. Exchange rate is becoming relatively stable. They brought out
Mm,
inflation numbers today, and we saw that it came down.
right. I
you
saw I
know,
saw that actually earlier on today as well. So
yeah.
it kind of like
So
made some people more comfortable, if I will use that word.
yeah, but it's just that oftentimes people don't get to understand what it is when they say because people will still tell you that prices of things are still very high. Why is government saying inflation is coming down? But it's because they fail to understand. You know, people fail to understand that there's a rebasing, and the rebasing are brought about a new base year. So
Ah,
what you are basing your prices on is on the new
it's
base year, not the old one that you used to know in 2009 anymore. So people will tell you that I used to buy
mm,
it like this in 2009, prices should go
that
back.
was
No,
then. No, this
that's
is
not what we are
now.
saying. This is a new era. This is a
So
new
you need
era.
to do your homework
Yes,
and
and all that. So
apply
people need to
as
have some level of
mm,
knowledge of economics and how the economy work, so that when you see these things, it will not be strange. So that's that. So for me, the market is likely going to do well. Yes, don't think that the market is just going to give you this straight line positive upward trend.
all true.
No, it's going to be volatile, but we'll
Right.
have more of positive trend despite the volatility that's going to be in the market.
Thank you so much for all that insight.
Mhm.
See, what when we're talking about things like this, especially economics and finance, it never sounds this interesting. But thank you so much for making more
Yeah,
interesting and fun
yeah.
for us to get insights in. But how can people reach out to you? They want to ask further questions, they are confused, they need insights. Where do they go to? Your social media handle that they can reach out to you on?
Can I at this point mention my name of my organization?
Well, you can, please. If
Okay.
that it however, it's better if it's tied to a social media handle so they can always follow through from there.
Oh, okay. So if you reach me at samtu.ng, Facebook, Instagram, Twitter, LinkedIn.
So take that again.
Samtu SAMTL
Okay.
.ng.
That's where they will always
So
get
it
to you.
is Sterling Asset Management and Trustees Limited, just like you've mentioned at
Ah,
the end of it.
okay. So that makes it clearer. So they know what it is or what it stands for. Thank you so much for your time and thank you so much for the insight that you shared this evening. Lagos, you know where to find Dr. Patrick Ejumedia and for you to get all that insight. It's been so interesting. It's not the one that will have you cracking your head as to, okay, what does this mean and what doesn't it
No,
mean?
you don't have to. You don't have to. Long ago when I was in the academic, one thing I used to tell my students is that whatever you know and you cannot explain to your grandmother, you don't know it.
I agree with you. That actually makes a whole lot of sense because why make it sound like, oh, it's rocket science when you could just break it down in the simplest
Yeah.
sense.
So if you cannot explain it to your grandmother, it means you crammed it. You don't know it. So don't come. So when my students come to me and they are saying, no, 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 you don't know this thing. Go. Go and learn it your way.
All right, Lagos. Thank you so much.